All right, so today we're going to be talking about creating a blueprint. That is a trading strategy that you can use really no matter the market, okay? Whether it's futures, options, Forex. But I trade futures, and if you're someone that's new watching the channel, thank you for tuning in. For all those that have been following the channel for a period of time, thank you for watching today's video as well. But we're talking about, again, about how can we create a blueprint that will allow us to become a profitable trader in the end, right? And some of you maybe already have a certain strategy that you actually use that's profitable for you. And if so, stay tuned. There's nothing wrong with watching, what I'm going to show today, because this is just breaking down how I trade in a sense. This is my own personal trading strategy that I use. And we have people or traders that tune into the channel that are part of our Discord. And if you're interested in becoming part of the Discord, the link is down in the description portion of the video. And we also have those or individuals that, seek out and want to become elite members or elite channel supporters as well. And that link is right below the Discord link down in the description portion of the video. So you may be asking, what do you receive with that? And you receive the trade breakdowns. So it's a private community and it's only $6.99. So the reason why I'm saying that is because people always are asking me all the time, how can they become an elite member? It's like I don't think a lot of people take the time to find that link, but I'm letting you know that link is right below the Discord link in the description portion. Just scroll down to the description portion and you'll find that. But again, a blueprint, what does it consist of? Basically, it's going to be, honestly, all up to you. What is it that you actually makes up your strategy? Okay, for me, it's all about confluence, finding a means to where I'm moving in direction of a chart, in particular a higher base chart, because we want to be taking our trades if the market is bullish and we're trending in a certain direction, to the upside or downside, because that's how supply and demand works. That's pretty much 90% of how I trade. Okay, every once in a while I'll take or look for a liquidity sweep trade setup. I primarily do not trade support and resistance, because a lot of times when you are taking a trade to where the market breaks through an area, say resistance, and it pulls back to which was resistance, now a key area of support. You're kind of caught in between the halfway point of a move in a sense. So you can become liquidity because there could be an area of demand right below, meaning within that swing where the market broke through an area of resistance. So if demand's resting right there, then you can become part of liquidity if they run that area of support. All right. But I'm going to show you, because what I do, again, I mark up my zones, trading supply and demand off of a higher base chart. It could be my 120 range or a 60 range. I do not trade time-based charts. I don't trade tick or volume. For all those that always ask me, okay, I know people always ask me, they send me a message, what charts are comparable in comparison to like range and time. I don't know. I never traded time-based. I never traded tick or volume. So maybe you'll find that answer, or maybe you'll find something that's relative or close to if you kind of come over to the Discord community and ask, send out a question on the general chat channel on the server. Someone may have an answer for you, maybe a certain time frame that's kind of comparable, but not exactly to, because time-based charts are different than range-based charts. The calculations are different, so you have to first and foremost understand that. But the blueprint to how I actually trade, the strategy, again, it's marking up zones off of a higher base chart. So I want to show you in looking at, say, Thursday and Friday's trading session. Okay, we'll talk about a few trades. I posted some of these trades over on the Discord community like yesterday, so I'm going to pull that up right now. All right, so here's a long opportunity trade that I took. This off the 60 range chart. Again, I marked my zones off my higher base chart, and then I moved down to a lower base chart or range charts. Okay, this was a demand zone right here. The market, we can see it breaking to the upside, breaking structure, pulls back, break structure above here at 20,179. But this is a demand zone because we are, this is a bullish move to the upside, breaking structure to the upside. Okay, so and then we have this area where it broke through this major high right here. So in the pullback here, breaks higher, takes out this high right here. You have this demand zone resting back here. The market pushes up, pulls back, is breaking higher, bullish move to the upside with lots of buying. Okay, now it's also a high probability zone. Why? People always ask, because there is a it's been unmitigated. It's not tapped back into, and it never came back to it. When it broke away and created this area of demand, it did not immediately come back to it and fill the area in back at the demand zone. Okay, so it didn't take, it was like what, that was a 945, say for example. It took it all the way to roughly 1105, 1110, somewhere around there for it to come back. So we're talking like an hour, 20, 25 minutes before it came back. All right. So by the time that it did that, okay, what I do then is just move down to a lower base chart. So all it is, guys, I'm telling you, it's marking up higher base charts, either demand or supply. And supply and demand works best when the market is trending. So look for trending directions off of your higher base charts and take your trades on your lower base charts. If the market's trending to the upside, look for pullbacks to where the market is also trending to the upside or making bullish moves to the upside, breaking structure on a lower base chart, pulling back to some key area of demand. Okay, so I'm going to show you that now. Mark the zone off my higher base chart. Now I'm going to move down to my lower base chart, my 24 range. And as you can see, once it taps into this blue rectangle zone here, all that is the higher base 60 range chart that I marked the zone. We are bullish to the upside. Now, when we're looking at the lower base chart, it could look as if we are, moving lower and breaking through, some areas of structure to the downside, some small swings where the small structure breaks. But we are bullish on the higher base chart. So don't counter trend trade against what's going on the higher base chart. If we're bearish, on the lower base charts, because we could be that way. It could actually happen to where the higher base chart is bullish, okay, because we haven't broken any structure to the downside. On the higher base chart, we're constantly breaking structure to the upside, and it hasn't pulled back and broken any structure lower on a higher base chart. But on a lower base chart, we can actually, start to break structure lower on a lower base chart. But then if you do that, why are you going to trade against the grain? Trade in the direction of the higher base chart and wait for the chart. Wait for the market to pull back to a key area, a zone of demand off of the higher base chart, and then look for a move on the lower base chart to take your trades. I'm going to show you this right here. Okay, so even on the 24 range, we start to move lower and start to break structure to the downside here, as you can see. Okay, but the higher base chart, we are still bullish. All right, you see, we haven't broken through any area of structure. If we break below this area here, I say at 20,000, say 40, then at that point, then we can start to look for a shift in sentiment, meaning in direction of the market to where we were once looking for longs, look for shorts. All right, so let's move on. The 24, we pull back. Okay, we're tapping to the higher base demand zone. So if I'm going to trade demand and it taps into the higher base chart, then I need to look for a demand setup on my lower base chart. So what I did, I'm going to show you right here because, this is the trade I took yesterday. All right, this is a scalp trade off the NASDAQ. I'm just showing you this as an example. You're going to see these type of things set up all the time. So I moved down to my lower base chart. This was that area right there. And all I'm doing is looking for a bullish move to the upside to where now I got a demand setup on the 24 range chart. All right, so it pushes up, pulls back, breaks higher here, okay? So we break structure to the upside. Right here on the pullback, this is a low probability zone right here of demand. You could have taken that trade there to actually go long, all right? So as you can see right here, this would have been a trade opportunity, or you can wait for another, demand setup as the market is pushing higher to the upside. So I got in the trade a little bit late. I waited for more rejection to show me, and as the market was moving higher, it was making these highs, pulling back, and then breaking to the upside on the lower base chart. So it pulls back, and it doesn't pull back. This right here would have been the area where I would want to head to pull back to and never tap back into it. So I got in the trade more aggressively. But look for a demand setup. Like again, the market pushes up here, pulls back, breaks higher, comes back right here. You can get in right here. Low probability zone. Yes, it is on a lower base chart, but on the higher base chart, like I said, we are already bullish to the upside. Okay, and this is a mitigated, not tapped into demand zone. So, if we have a higher base chart and we tap into it where it's a zone that's not been tapped into yet, there's a gap sitting there at the zone, it's unmitigated, lower base chart, even if we have a low probability setup of demand, I'm taking that all day long, all right? So once you get into the trade, it's just a matter of trying to determine where you're going to take the trade back up to. Once I'm into this trade here, I'm looking at price action as it's coming back down. I'm going to aim for it to run this high right here back at 20,120. That's going to be my area to get into because I would be looking for it to run to the upside and take out some area of liquidity. Just simply put, that's all I'm looking for it to do. All right. So again, marking the zone up off the higher base chart, using that chart as confluence with a lower base chart, and then looking for a demand setup. We are bullish on the higher base chart. Then look for a demand setup on your lower base chart. Look for a demand zone setup on a lower base chart, moving and taking trade going long in sync with the higher base chart. If you're not doing that and the higher base chart is bullish to the upside and you're trading shorts, then you're going against the higher base chart and you're going to probably get stopped out more than likely most times, okay? I'm not saying you won't get lucky, but more than likely, especially if the market is tapping into a higher base demand zone like this right here and we're bullish already, I wouldn't be looking for opportunities to go short until the market starts to break through some higher base chart structure, okay? So then I'm going to show you. Let's go over to back to the 120 right quick, all right? But when taking that trade there, I was also mindful of what I was looking at. So I moved up to the 120, and I saw that, okay, there's a demand zone that's unmitigated. It's not tapped into on the 120, right below that demand zone on the 60 range. So that smaller rectangle there, that was from the 60 range chart. If I scale up to a higher base chart, the 120, then this is a demand zone on the 120 range chart. So be mindful right there that the market, you can look for a setup, an opportunity to go long because we are bullish to the upside, but also keep in mind that right below us on a higher base chart, there is a demand zone just as well that the market may want to tap into. And it did. It rejected it. But here's the thing. Most of people would say, okay, it tapped into a higher base chart, Mike. How come they didn't push all the way back up here and fill these gaps? Why? Always be, mindful of, and look, when you see the market where it has broke through areas of structure, pushed up here, pulled back, broke structure above this area, broke structure here to the upside here as it moved higher, look below you. Even though this is a higher base zone on the 120 range, look to see, are there areas to where there are demand zones resting right below in which the market could tap into? You got to think about that. Are there areas that haven't been tapped yet? Yes, we have right here. We have right here. So 1, 2, and let's see here. And right here, all these have not been tapped in. You can see there's a gap there, or where it's not mitigated right here. And let's see, right here. Okay, so there are areas that still need to be filled to the downside where structure had been broken previous to. So yes, this is a higher base zone on the 120, but there are other areas where there are gaps in the market or zones below where the demand was created where the market had broke structure prior to where the market is more than likely want to fill in. And it did. If you look at it, yeah, it rejected here, didn't give you a lot of, didn't kick off with a lot of points, back to the upside here. And then you take a look here, you say, okay, where does here, and down here. So all these are opportunities as well. And the market will try to fill those. If you see what happened here, what did it do? It rejected, came down lower. Probably got stopped out maybe, depending on where you took profit at. It came here, rejected, but be careful because right above here was a, let's see here. There was an area of supply right here. Okay, the market didn't come up there and tap it, but it did go up there and tap that area of resistance. Resistance right there and move lower. Came down, filled that zone there, and eventually came down and filled this zone right here. So now all the zones. Let's see. Nope, there's one down here at the bottom. Make sure. Yep, down here there's a demand zone right here in which the market could, eventually tap into. It could reject where it's at now because that was an area of supply, and then it could want to push lower and come down here and test this. Now, why is this, say, for example, the supply right here? Because now we're breaking structure to the downside, all right? And be mindful when the market's doing that because it could really set itself up to where it starts to range, okay? Because now even though we're breaking structure lower, now we have this high here, and we're in between this low and this high right here, all right? So ultimately what we want to see is either the market come back up here and take out this high and break structure back to the upside, or maybe continuously breaking structure lower and testing, lower areas that need to be filled in. So yes, this was supply. Once we break structure and start breaking it back to the downside, this is the VWAP. That's the volume weighted average price indicator. So if we are below the VWAP, you can use this as a tool if you choose to. Typically speaking, the market is breaking structure to the downside and it pulls back to supply. If we're below the VWAP, okay, then that can be some added means of confluence. We broke structure to the downside on a higher base chart. We are pulling back to a key area of supply on the higher base chart, and we're below the VWAP. Then that's kind of the market telling you, hey, I'm still trying to push lower, all right, until it shows you differently. But all these were areas, okay. So let's take for example here. I'm going to say this. Again, we're going to mark the zone up on our higher base chart, right? Say, for example, you traded this zone right here. I was done after taking like 2 trades yesterday, I believe. I didn't stay in the market all day long. It's Friday, and the market sometimes does some crazy stuff on Fridays. But anyways, showing you, the strategy and how I trade. You can watch across the channel. You'll see me take the same trades over and over and over, and I'll post these trades over on our Discord community just as well. And also, if you're not an elite member, you want to become an elite member, you'll see where I go into detail about trade setups and break things down in reference to TPs or profit areas, stop losses, talking about the strategy, just my mindset of what I was looking at running up to as a trade was setting itself up. But again, we break structure to the upside. Even though the market is moving back lower here, these are still considered as areas of demand. But also just be mindful, if you start to see where the market is breaking structure lower, there could be areas of supply resting above. So as we were breaking structure lower, taking this out, okay, lower. All right, now we are, we can start to have a bearish bias to the downside. We're breaking structure. So this right here could be an area of what? An area of supply right here. It didn't come back to it, but it is an area of supply. It runs lower, tapped into demand, but we also moved lower right here. There's a supply area right here. So, and you see what happened. Even though it tapped this demand area, okay, on the higher base chart, it came back. You could have maybe looking for opportunity here. I'm going to show you. We're going to move down to the 24 range chart right quick at 1242. All right, this area right here. Okay, this would be the area where that zone is at on the 120. What happened? The market pushes higher. All we're looking for at that point is just a demand setup. Okay, the market pushes higher. Here's an area of demand, aggressive buying, but it doesn't come right back to the demand zone. What does it do? It comes down to support, and then it runs to the upside. I drew this out because it's always, you're going to have times to where the market's not always going to tap into a zone. The market's going to do what it wants to do, It may even take you out, okay? Even though the zone may be a beautiful high probability supply and demand setup. That's the thing about the market all the time. You just have to know when it comes to risk management, knowing when to get out the trade. I talk about, risk management and how to get out the trade early enough so that you can kind of preserve your capital and not take a full on stop. But in this case here, maybe you grab this area and took this trade here off of support right here. It never tapped into the demand zone off the 24 range when it pulled back, but it blasted to the upside. As it was moving higher, you see this sideways movement here? Why did it do that? Okay, we go back to the 24 range. What was right there? Look, supply right here. Okay, because now we're breaking structure. We're below the VWAP, say for example, and we are breaking structure on the higher base chart. Now this is a supply area right here. All right, so maybe you say, hey, Mike, what would that trade look like if I was to look to take this supply setup? Because now we're breaking structure to the downside on the higher base chart. Pulls back, supplies right here. This is around about 1:30 in the afternoon. We're going to move down to the 24 range and take a look at it. So we go down to the 24, pulls up to the area of supply. Let's mark it, okay? Let's go ahead and mark this zone on all charts so you can see it, okay? Go down to the 24 range. Boom, there it is right there. Now, we tapped into the zone. At this point, all we're looking for the market to do is create an area of supply, meaning where it's breaking, where it turns back around and it creates a supply zone, okay? So we're moving to the upside here, still on the lower base chart at 24. Then it turns, boom, breaks lower, okay? Taking out these swings right here, aggressive selling to the downside. This will be my area to where I would look to get into a trade. Right here, once it pulls back, it's an untapped zone, unmitigated, that's what that means. And so we have a setup here, a beautiful setup. We have a 120 range, higher base, moving lower, supply setup right here. Scale down to the 24 range, boom, I'm waiting for a supply setup. It creates one right here, runs lower, aggressive selling to the downside. You see that? Pulls back to a key area right here. Then it creates a supply area, like I said. All I'm doing is waiting for it to come back, okay? It keeps breaking lower. Eventually, it comes back. So it broke and made supply right here. So it made this demand setup right here, or it's this area of demand around about 1:30. And it took it to about 2:15 for it to come back. So we're talking about 45 minutes. When it taps back into that zone, all we're doing is looking for the break and close of a candle to the downside. So basically right below this area here at 20.62, go short. And you see what it does? What does it do? It runs lower. Look at that. It just continues running lower. All right. So that's what I do. I'm using multiple chart confluence, always marking my zone off of a higher base chart, trading in the same direction of whatever going on the higher base chart. The higher base is bullish, trending. I'm only looking for demand setups on my lower base. The higher base is bearish, moving to the downside, was breaking structure. I'm only looking for supply setups on the lower base chart where the market is breaking and creating areas of supply on the lower base chart. Marking two zones pretty much. the higher base zone and then a lower base chart zone. That's all I'm doing. That's it. So if you spend some time kind of, watching this video, maybe play it once, twice, 3 times. Watch it more than, one time. Go back through it. Because that's as simple as it is as far as my blueprint to the strategy that I've created for myself in trading the way that I actually do. And it gives me, confluence. I'm not just taking my trades off of one chart. I'm waiting for one thing to happen and then something else to happen, and then it just gives me more of a means of confidence and confirmation to take the trade. All right, I'm not just marking up one zone and waiting for it to come back and then see what happens and taking my trade. I want to get more confluence, and you can use other things and tools. Like I have the volume profile right here. I'm not using it and just basing my trades off of that, but if we're in a general area, say for example, like right here where the market did reject right here, where were we at? We're below a low volume area here. Okay, the market likes to, if I'm looking for longs, likes to, say for example, move from a lower volume area, okay, back to a higher volume area, all right? And then it comes up here, all right? This is a supply area right here. We broke structure to the downside. We're below the VWAP. We're above a high volume area on the pullback right here. I take my shorts above a high volume area. Those type of trades tend to work out better for me. Like down here, this was a demand zone resting right here, breaking structure to the upside. Now, even though we are breaking structure lower, now, what I'm trying to say is that you can look for opportunities with demand areas below you, but just be mindful that we're breaking structure lower now, so that you could just as well supply resting above. So the market, you're kind of in a two-way situation where there could be demand and supply. But if we are moving or breaking structure lower to the downside, you may want to kind of stick with looking for, supply setups as we're moving lower. Now, this was a beautiful setup right here. This was because we are getting to the latter portion of this leg to the upside. So this is probably about below the 50% area. If you were to run like a fib, I don't trade fibs. I'm just telling you of this leg to the upside where we have this high, this low and this high. This is a demand zone resting right here. It's below a high volume area in a low volume area, and again, there's supply right here. So in opportunities like this, this is an unmitigated, untapped zone where there's demand at. We have supply resting above us, and we have gaps resting right there. If I move down to my lower base chart and there's a demand setup that takes place off the 24 range where I'm getting a beautiful demand setup, I'm going to take that trade to fill in these areas of imbalances, the gaps back up to the upside, and possibly back up to this area. Probably not back up here. I'll say this right here because this is an area of, if you see here, this is a low probability zone right here. Okay, because there's really this zone has already been mitigated, so that's why I marked it in red right there. It makes it low probability. Doesn't mean the market cannot reject from it. And as you see, it did. But just be mindful about low probability zones because if they've been tested, more likely they may kind of push through that area there. So you're taking on more risk if you're looking to trade low probability zones. But this was a high probability demand zone right here. But again, be mindful because now we're breaking structure lower. So that's what I'm talking about. Just using multiple confluence, using multiple charts, one chart, higher base, move down to a lower base, look for the setup, okay? So just kind of watch this video again and run through it 2 or 3 times, and more likely you'll understand what I'm talking about if you spend time watching the videos here on the channel and maybe becoming an elite member. Again, that link is down in the description portion of the video, and I'll walk you through setups that I've taken, even trades I posted over in the Discord, and walk you through those type setups to show you what I'm thinking and why I took those trades. So, but anyways, I appreciate everyone tuning in today, Saturday. Yes, it is the weekend, and I still wanted to push some content out for you so that you can watch. And the reason why I do this is because I want to see people become truly profitable. Okay, and that's the reason why I do it. So, if you want to become an elite member, like I said, I forgot to say, but it's only $6.99. I'm not here to I don't have a training program and I don't have a mentorship program. I'm not here to charge people big amounts of money. All you're doing is support my efforts as a content creator, and I'm giving things back in return. For $6.99, you're talking about the average price of a cup of coffee, and most coffee shops charge more than that per cup, and that's on a monthly basis, $6.99. So the choice is yours. But anyways, if you're not a current subscriber here on the channel, I definitely appreciate it if you come over, join the team by simply clicking on the sub button, the subscribe button. It's free to join, okay? We also have a free Discord community if you want to join. That link is down in the description. So both links to the Discord is there and to become an elite member right below that one, all right? If you Make sure to always post if you know when you subscribe to turn your post notifications on. Click that bell so you don't miss one of the uploads here on the channel. And last but not least, if you found value in today's video, guys, I truly appreciate it if you click on that like button. I'll see everyone in the next one. Take care and have a wonderful weekend.